Wake up, motherfucker.
Yo. What's up? March 26, 2026. Well, Armani, I don't know how many people out there are interested in finance stuff, but yeah, that channel is all about finance. Eric, if you want to bet against the taco, you got to go short silver and gold. That's the better play. That's the better play. Yeah, hit the likes, y'all. Hit the likes. Yeah, what's up? What's up, guys? So, yeah, you could have entered in a good short today on that if you wanted to. Let me see. Hold up. Let me play this first. Let me show you this first. The crows. The crows have left Jerusalem. Ah! Oh, I don't know. All right. So I guess some crows have been circling around Tel Aviv. Okay. By the way, this is the worst possible omen at a civilizational level. It's still taken seriously home in England, and the Romans would stop. It was interpreted as this: the gods have withdrawn their protection over this land. Oh, it's over! It's over! Nukes are coming, baby! Yeah, GDXD. Yeah, GDXD. That's how you do it. GDXD. GDXD was up 12%. So you could have did it that way. Anyhow. The all right. What's up there? Okay, let me get my shit up here. That's it. So they're gonna run out of interceptors, right? So I think that's the end of Israel. If there's no ceasefire anytime soon, I believe the projections are by next week there will be no more interceptors to intercept stuff like that. So yeah. Blah blah blah. Let's see. Yeah. Hold up. All right. Screen. Yada yada. Okay, let's go. So GDXD was up today, right? There we go, 15%. So GDXD is the inverse ETF of gold mining stocks. So if you don't believe in taco, you're betting that gold and silver will go down, dollar will go up, bonds are going down, yields going up, oil going up. So the best play to make is shorting gold and silver. That's what I've been saying this whole week. So Sunday I said, like, if you believe in taco, you long gold. Okay? And that was GDX. Okay? So Trump screwed that up because he did it 2 hours before the market opened. I could have got GDXU at 120 or 115 or even lower if he allowed the market to puke some more, because I bet the gold and silver would have kept puking back down. And that would have been a 60 to 90% play from that day up until Monday. If I held it on to yesterday, that would have been 60 to 90% easy. So if you bet against taco, you short. So you use GDXD, the reverse. So this is the reverse ETF. So basically, this goes up when gold and silver goes down. So that's it. I've been saying this. U means up, D means down. U means up. This is kind of easy. They made it easy for people to understand. D is down, U is up. So then doing oil, right? Oil is just gonna go like oil. U is the oil companies. Like, how much did this go up? 4%, barely higher than the high of Tuesday. Okay, whatever. I mean, if you're really a true taco trader, gold and silver is your bet, because gold and silver already act like leverage. And then on top of that, you do GDX. Gold miners are leveraged on top of that, because every time gold goes down 1%, GDX goes down 3%. Then you leverage that up and do 3 times that. That's 9%, right? Or something. I mean, there's no direct correlation, but gold miners and silver miners are kind of like leverage of the actual gold and silver. Gold and silver already act like leverage of oil, dollar, and everything else. So you don't need to learn futures. You don't need to learn options. If you make gambling stakes plays and you want to bet on taco or not taco, then you just flip between GDXU, go back to GDXD, go back to GDXU. So that's what I've been saying. Trading the gold play, because gold right now, if you look at this, the gold miners, you see it makes a big range right now. So let's say it goes down, then it pops, then it goes down, it pops. So for the rest of the year, it's probably going to be like some crazy ass thing, like, oh, Trump taco, bounce. Trump doesn't taco, fail. It's like this now. Gold is no longer something that you can just buy and hold like in the late 2025, right? This is really the best time to just do buy and hold. Now it's over. Now it's trading. It's gambling time, because now if you guess the right time when Trump tacos, you bounce. Then you guess the right time he doesn't taco, like this. I only use leverage with this thing. I don't use options. I don't have a margin account. I don't do that. I just drop 20K and I'll just gamble on this shit and be like up and down, up and down. If you get like, okay, you get like 10, 20K, right, a trade, and you get like maybe 30, 40%, you know, right? You can see like that's 3,000, 6,000 upwards to like 20,000 a trade if you go like up to 50%. So that's how I do it, just because I have a lot of money. I don't want to learn options. I don't want to pay the bank for a margin account and pay interest. So that's what I do. Okay, so what's get in price for GDXD? I don't know. You should have been in this morning. So that's why I told you last night when you were asking in what, Dead Man's channel. I said, well, if you really believe that oil is going to go up, or you believe that Trump is not going to taco, it's better. You're better off just shorting gold and silver with GDXD. So every ticker I mention here, there's a reason. There's a reason for it. I'm not going to be like, oh yeah, you should do this. That's up to you. But I told you to get into GDXU Monday because like I thought he was going to taco, right? It's like if you bet on taco, then you would be Monday morning, Sunday night. I said GDXU is your best bet. So it went up, right? 8%, 9% on Monday after the open. If you got it pre-market, well, before pre-market, it wasn't even pre-market, really pre-market yet. It was like early pre-market overnight. You would have got GDXU at a deep discount. You would have got a taco trade. You would have got out. You could have held it. You got more on yesterday. And then if you wanted to short gold and silver, you flipped it for GDXD. It goes back the other way. This is not a good time to bet because we're very close to the weekend. No, this is me, GetCrack. It's not John. So that's what it is. So yeah, that's it. So that's why I said Monday, Sunday. I told you that's the way to do it. That's how you do it. That's it. I'm not going to tell you to do it. I'm not going to point a gun in your head and tell you to do it because I have no insider information. You are betting on stuff that I have no clue about, but if you want to bet, that's the way you bet it. So anyhow, I was in SOXS. I was shorting semiconductors up 14%. Good. So that's exactly where you want to be to short. Not a good time. You have to bet before the tacos. You have to bet before the tacos. Yeah, the weekend is the events happen. That means you have to bet Friday or early morning. You can bet overnight. That's why I said you have to bet overnight. If you want to bet overnight, you get a Robinhood account and you can trade GDXU on the overnight. I don't know if they have GDXD on overnight, but they have GDXU on overnight. So that's why I don't do these trades, because then you don't have any control over it. And even if you have overnight, it doesn't matter, because the next taco event will be Saturday. You remember, Trump made the deadline to be this Saturday, 7 a.m. Eastern. He extended that deadline from 48 hours. And then he was like, okay, I'm going to add 5 days from the 24-hour mark, and that's it. So it's 7 a.m. Saturday. Nobody can trade anything that day. So that's why. So there you go. But I'm not going to bet, right? I just do the easy stuff that's obvious, because what you do is that you bet on the levels. I don't bet on the events. Like, I want to short semiconductors. What's the best place to short semiconductors? Every time it gets kind of close to this yellow or into this yellow, I short it. That's it. Once it gets too far away, it gets below this third dashed line, I long it. Short it, long it, short it, long it. See? That's how you do it. I have no clue if I'm going to be right or wrong, but for the most part, I'm going to assume it's going to stay in this range. Now, this weekend is going to be more crucial, because if you look at the SPY levels, you look at this. This is the first time we had 4 weeks. So Friday will be the last day of this week. If we end at the bottom here, we basically make a nice red candle. That's 1, 2, 3, 4. 4 red candles after cracking this moving average. All right. So if you look at the last time this happened was in last year, February. This is when everything went to shit, because earnings wasn't good enough to push it up. And then people started getting afraid of tariffs. So then you had 1, 2, 3 down days. You went sideways for the next week, and then you continued on 1, 2 before you bought. You see? So it's went up, going up. It's very rare to have so many down weeks. Okay, you have so many down weeks like this, then that's why you kind of go, well, I don't know nothing about setting levels. Every show I show you the levels. I show you below 4,000 whatever in the SPX. I do that. See, that's what it is. I show you how that comes about, because we have the last show, or on Sunday, I showed you there is a JP Morgan collar that sets a level. There's these resistances that set a level based on charts. So you look at this chart, look at the last time we had a low right here. This is an important level, right? 653 on the SPY. So those are levels. That's the levels you've got to make. So you look at it every day. If you look at it every day, it's second nature. You just go like, oh, that's a level. There's a level. That's a level. And then I add to it with the options. I show you where the options market sets their level. The JP Morgan, they set their levels based on options, and then you have a second level to look at. If all these levels coincide, then you know that there's an issue here. All right. So let's look at the SPX. So this is where the JP Morgan sets their levels. Okay, somewhere around this dashed blue line. You see we're tagging it again, because on Friday we had a little bounce right at the end of close. So it kind of hit that level, bounced a little bit. And then now people were saying, well, maybe we can get up to 6,700. Looks like we failed, because I said on Sunday night we probably will just be around 6,500 to 6,600. And it'll be unlikely that it will get further higher than that. Looks like I'm right. So unless Trump tacos on Friday, you won't see it Friday. Friday will probably, it's going to crack this level. People are going to panic. They're going to sell out before the weekend. Then I'm going to go look at the other direction and be like, well, if Trump tacos on Saturday, then you're going to get a nice bounce. You're going to make a lot of money. So if you go long gold and silver, betting that Trump will taco on Saturday, extend the deadline again, Then it will be Monday. We'll have a rally going into April Fools. Then April Fools, you short again. Then you short again and go back the other way. So that's all you can do. I can't do anything for you guys because like April up to October was easy. It goes up. Market goes up. I don't need to do shit. When market goes crazy, then it's like, ooh, when is it going to stop going down? Blah, blah, blah. Everybody's going to be guessing. Hem haw. So that's where you have to think. When you don't have to think, it's very easy. Okay? You don't have to say anything. I don't need to say anything. Yeah. So that's why if you want to trade that, GDXU, go back to GDXD, go back to GDXU, go back to GDXD. But if you do it wrong, you'll lose money, right? You guessed the wrong time to go to GDXD. You guessed the wrong time to go GDXU. That's why I don't recommend it. You have to be an advanced elite trader. So I'm not that guy. I'm not that guy. So, or you have insider information. So if you got a direct line to Jared Kushner, you'll make a lot of money. But if you don't make any money. Sorry. The best thing I could do is just get a 10% grab and leave. I like today, right? I short SOXX. I'm out. I don't know what's going to happen tomorrow. I'm gone. If this thing goes down a little bit more, okay, who cares? I made my 10, 15, 20%. I'm gone. I missed out on a 60% move. I don't care. I can't predict him. I don't want to predict him. The best thing I can do is try to say, okay, it's worth to gamble here because of a certain level. So when you go long, you want it to be at a certain level. When you want to short, it has to be a certain level. And that's how you do it because you know these levels are important. If you look at SOXX, why is this important? Look at this bar here on the weekly. This red bar is significant. This was after the NVIDIA earnings, okay? So this basically says that the market can't figure out if it wants to go higher than this bar or lower than this bar. And you can see that the next 3 weeks, it's doing that. It gets up to the top of this bar or a little bit over, and then we go back down. It goes below this bar, like right here in early March when we had the first Iran war crap going on, then it bounced. All right, so back, forth. That's it. That's all you can do. But I can't tell you like if it's going to work because it works until it doesn't work. When it doesn't work, you get burned. Right? And when you have a weekend coming up, I don't play it. The weekend, I don't play it. I'm at a disadvantage already. I don't play futures. I don't play overnight. I'm at a disadvantage already. And then you add on top of that a weekend. I don't play it. I don't care. I don't care if it's the most amazing trade of my life. I don't want to touch it because that means it's just full of gambling people playing the casino. And it's just like, I don't want to be a part of it. It's better. I told you, mathematically, it's better just to get 10% and leave. So when you do these short-term trades, let's say you got $1,000, you get 10%, right? You get $100. Then you take 1,100, you get another 10%, right? Then you get another 10%. If you do it consistently, like I showed you, over 1 year, you get 2,000%. Because if you can just do 10% consistently, you'll make very good gains. I'm not the guy looking for like, oh shit, that's 100% trade. I'm gonna do 100% trade just cause. Yeah, it feels good when you get it right, but you just blow up your account on Monday because you can't trade on a Saturday, right? So you get fucked. That's why. So that's it. Anyhow, only semiconductors is the one that's leading everything right now. If you look at FDN, you see this still weak. Software and communications still weak. So if I want to go long the NASDAQ, I'm looking at this stuff. I'm looking at the cloud stuff. Okay, so these types of stocks here that have been beaten down for several months, they're a lot better to go long. So if you think there's going to be a taco or a big dip coming soon, then these stocks are the ones to watch because they're oversold. So they'll have a nice bounce. When you finally get a relief rally, they'll go up real good. So outside of gold, silver miners, these are the ones that you'll be looking at. Semiconductors are the ones that people keep running back to, and it's kind of getting annoying because every time you go on Twitter, they're going like, "Oh, yeah, just buy semiconductors, easy." And bro, that makes me really think semiconductors are gonna puke really hard now. And we already see after earnings, look at Micron. So it's down 16% on the week. And I said, like, if that earnings was bad, then there's a potential it can go down 65%, down all the way here to 150, whatever. So, yeah. So what you're going to look for is that it's going to level here at 350. Okay. It's going to keep trying to protect it. So let's say there's a bounce, and that bounce is temporary. Then the next leg down in the market will really crash semiconductors, and Micron being one of the highest, because what? It's the number one stock right now in the SOXX. That's it. This is going to be really bad. That's going to be really bad, and it's going to crash the whole thing. It's going to crash the whole thing. And you can short SanDisk too. That's another one. Western Digital, Seagate. Okay. Everyone's hiding in these stocks. And you already saw the bleed here in the optical, laser, glass type of electronics connectivity area. AAOI is down 14-15% right here. If it fails here, yeah, it could just go all the way back down to $19. So if you want to do this, go short AAOI. You know, if you have options, right? If you got an options play, see if you can short this one. This will be a lot more delicious to short when the market tanks. So watch this one, I guess. AOI for a short. There you go. Now, for you guys that can't do options, you can do MUD. So you can short MU using MUD. Okay, MUD is the inverse of MU, but this one only doesn't give you any leverage. It's just 1-for-1. So if Micron goes down 10%, this is only going to give you like 10%. If it goes down the straight line, you might get a little bit more. But yeah, MUD is the one you want to be in. But you got to wait a bit. You got to wait a bit, I think, because we're at a level where Micron should find some support, and you don't know if he's going to taco over the weekend. So if it tacos, it's going to bounce. And then you're going to try to find the level where it's going to fail bouncing, okay? So let's say here, this is the daily chart. Let's say we get a bounce here, okay, from here to here, maybe around 400, 405. You'll see it like kind of have a tough time getting towards 435. That'll probably be the time you go MUD if you want to short it. I mean, personally, I would just do SOXX. So if you just want to short semiconductors altogether, this has 3x leverage. And then, you know, once MU rolls over, the rest of them will roll over. Yeah. So that's what my thinking is. Okay. So yeah, I think you understand what to do right now. GDXU, GDXD, you flip between the two. GDXU, if you think he's going to taco, this will really shoot up very nicely because silver and gold are very, very volatile. So a lot more volatile than other things. And so this is where you want to be. And it gets attacked by a lot of stuff. So that's what I was saying. And if you believe that Trump is going to land troops and do whatever, then GDXD. So oil should shoot up, causing this to go up because the cost of mining gold is increasing. The yields are going up. People don't want to have anything to do with gold that doesn't pay any interest, right? When the yields go up, people want to go back into T-bills, dollar. That's it. No. I'm not going to guess anything. Guessing, I don't have any gut feeling. I recommend you don't try to bet on tacos or no tacos. So that's it. It's commodities. Yeah, which commodities though? Which commodities? Silver and gold and copper are going down. That's what's going to happen. Only oil is going up. That's it. And fertilizer. Well, we'll see about fertilizer. Let's see. Fertilizer. Talked about this 2 weeks ago. CF. So it has a nice pullback, bounce. CF. Good company for fertilizer and other chemicals. The second one on the list is LXU. The third one on the list is IPI. I didn't talk about those two, but LXU this week has gone up about 17 to 20%. Looks like I'm going to have to add LXU. LXU is a lot more volatile because it's a smaller cap, mid cap to small cap company. But if you want a nice run up like it did during COVID into the Ukraine war, this thing will continue on as well. Okay, that's it. And then the other ones will be like wheat, corn, soy, sugar canes, all this. This will be using the TILL ETF. So if you don't trade futures, yeah, TILL. If this thing moves more slower, maybe it's better for you boomers. You can hold this for the rest of the year because I think food inflation will be going up for the rest of the year. Aluminum has stopped going up because I think we already peaked out. You look at AA, Alcoa Corporation. I think we've been stuck here in this range for many weeks now since January. So I haven't seen any change in aluminum thus far. Aluminum prices, sure, they've gone up, but aluminum companies that make the aluminum, that's the question. If aluminum gets too expensive, they won't make any money off of it. And also depends on which market you would do the trading on aluminum. There's the London exchange for aluminum. There is the Chicago exchange. I don't know how much aluminum is in the Chicago exchange. It's probably all in London. So unless you have access to the London exchange, I don't know how many of you guys can actually trade directly aluminum. Okay, so that's it. There you go. I can't help you with that. I've already mentioned natural gas way back when. We already got LNG is the company to get into. LNG Cheniere. So this is the company to get into. You see? This one. This is the best play for natural gas right now. That's it. That's it. And we have to talk about specifically what kind of natural gas, though, because like U.S. natural gas is not affected by what's going on in the world. You see, this is the U.S. natural gas, all the prices based off of Louisiana. No problem there. If you're talking about Europe, they already been screwed. So that's kind of their problem, not our problem. There you go. That's it. Okay. All right. Let's see what other stuff. Blah blah blah. Blah blah blah. Tungsten. I don't know anything about tungsten. Okay, so I can't help you with that. Sulfur. I don't know nothing about sulfur. So you got to talk to a commodities guy. All I can tell you is like, what's the play to make that people have access to? Those things are kind of like you. You're going to have to go find some research on that somewhere else. All I can tell you are the quick trades to make to get 10% here, 10% there, 10%. As far as long term, we have to wait and see. That's it. That's how we're going to go. Okay, back to SPX. Let's look at the monthly chart. So I drew this kind of like line here as a joke or kind of a joke. I said we would drop down to 5,500, go back up to like 8,500 before we finally crash and the whole economy explodes. So this is the beginning of the year. Okay, I showed you this. I said this is probably what's going to happen. Looks like we're following it. Now, do I still believe that we are just going to head straight down in a straight line to 5,500? I don't know. Maybe. So it's kind of like I was going to look for now. What I would say is that because this level is important for JP Morgan. So if you look at the show on Sunday night. This is very important, okay, for JP Morgan. This line, once you drop out of this line, we're going to go down to 5,500. I think what's going to happen is that we're going to kind of breach it a little bit, maybe tease that we're going to go down to 6,000, and then we're going to bounce, and then we're going to go down. So it's probably going to be more looking like this. Okay, it's going to be looking more like this. So let me get the tool here. So let's say we get a little bit down here, okay, into April 1st or something like that. How about that? And then we, oh man, I have to do this. Okay, hold up here. This is the tool, okay. Something more like this. I go a little bit here, okay, or that's too optimistic, I think. That's way too optimistic. Okay, hold on. Let's see. How about this? And then this. And then this. How about that? Maybe something like this. Okay? Maybe it looks more like this. Maybe it just does it very quickly. It's going to do that very quickly. So how about that? Okay? So you could say it's going to look like this. All right, it's going to do this, trick a bunch of people to short down here. You have a little relief bounce, and then you go down after you're done. How about that? So right now, that JP Morgan level is kind of preventing us from just cleanly breaking it. And then April 6th is the new taco deadline. All right, so there you go. We're done. So there you go. See, so that's why I said I don't trust holding anything for more than a day. You do your trade, you get your 10%, you get the fuck out. That's it. I'm not going to be sticking around. I got my 15% on SOXS, I'm out. I got my 10% on GDXU, I'm out. I don't stay. I don't stick around. So, yeah, if you want to do GDXU, go ahead. That will be the big play to do it, probably. Otherwise, what's the other one to do? I don't think there's anything as good as GDXU and GDXD. That's it. You know, that's all I do. So what I'm waiting for is overall, I'm waiting for this to happen where we finally get the relief rally and then crash into the first earnings. So the first earnings will be TSMC. So TSMC will start off the earnings season sometime around tax day, I think. So it'll be pretty close to tax day. So probably around April 20th. So April 13th to April 20th, we'll have the first semiconductor earnings. So something around there. If this thing wants to crash, it'll probably crash close to that date, into that date, or even after that date. Okay? So that'll be it. That'll be it. And then after TSMC, it'll take a long time before the rest of the tech earnings come through, like Intel, Apple, Microsoft. But the first one will be TSMC. That'll be the first one you'll hear about. Okay, but for now, you can't do shit. That's why I said on Monday, you can't really do anything. Anything long-term. You can't do any long-term planning right here. All you can do is like watch the levels, wait for the final dip, and then that's it. So we'll pay attention. Okay. Let me read some articles for you. Blah, 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 blah. Okay, this is the first one. So investors switch to cash from stocks and bonds like it's 2022. Investors avoiding risks from the Iran war, selling stocks and bonds, and rebuilding cash allocation. All right, so Warren Buffett's already been doing this. Warren Buffett, before he retired, made sure that everything in Shire Hathaway is already in cash. He's been doing this for quite a while. So the strategy followed after Russia invaded the Ukraine in 2022. So this is the implied cash allocation by non-bank investors globally. Global cash held by non-bank investors as percentage of total holdings of equities, bonds, M2 by non-bank investors. One thing to note here is cash also includes T-bills, so the short-term treasury bonds, okay? So usually you break up treasuries into bills, notes, and bonds. Bonds are 20 to 30 years. Notes are between 2 years to 10 years. And then bills are between 1 month up to 1 year, okay? And the 1 month to 1 year treasury bills gives you 5% over 1 year. So over a month, if you take like 4 to 5%, so 5 divided by 12, that's about like what, 0.4, 0.3, 0.4% every month you get a little payout. So if you got a lot of treasury bills, that's what you technically get every year. Of course, they don't pay you every month when you buy a short-term bill. What happens when you buy a bill is that it gives you everything at the end when it matures, okay? So if you have a 1 month, they'll pay you out after the month. If you have a 3 month, they'll pay you out after 3 months. So what happens is people ladder it up. So rich people would do this. They would have a group of 1 month. They have a group of 3 months. They have a group of 6 months. And they have a group of 1 month, 1 year. And then they all stack it up together. So you get paid every month, okay? Because you bought it like staggered. Like you buy this at July and then you bought this at June. I mean, you know what I mean? So you kind of get the idea where you just shift it around so you get paid every month after you stack up all the notes together. So you have a group of like 1 month, group of 3 months, group of 6 months, and group of 1 year. And then it averages out where you get paid every month. And then combined, you get like some roughly a 5% every year, a 4 to 5%. So that's what rich people do, okay? You can go on any YouTube and search bond laddering strategies, okay? And then you can find people that talk about all that stuff. That's how rich people do it. That means you have a lot of money and you just want to put it in cash. That's what you would do. If you have a lot of money in a brokerage account like me, like Fidelity automatically puts it into a money market fund, and then it's done automatically where you get like that 5%. So you don't have to do that. But you're gonna have to talk to your bank how they do things. So yeah. So it's called bond laddering or whatever strategy, I guess. So go to YouTube or you Google it. And there's tons of people that talk about this shit strategy. So if you're a boomer, that's basically what you should be doing when you're in cash. All right, bond laddering strategy, something like that. All right, okay. Now let's continue on here. So if you look at the cash, this is the cash level. So this is a percentage of what they own is in cash, and cash could be short-term T-bills. So it doesn't mean like they just have cash that doesn't pay any interest. Cash could technically also mean something that pays 5%, which is very good, okay? 5% is very good. How much does Nvidia pay you on dividends? Like go to your AI right now and ask them that. Ask that. Like compare Nvidia to how much what they pay, right? Nvidia, let me do it right now. Nvidia versus T-bills. Okay, let me see. Okay, I got it. Okay, take a screenshot right now for you guys. All right, let me show you. All right, here we go. Okay. All right, you see that? All right, yeah, you can see that. Nvidia is fundamentally a growth stock rather than an income stock, resulting in a negligible dividend yield compared to the high interest rates currently offered by US Treasury bills. So if you have Nvidia stock, you only get 0.02%. Okay, so you get like 1 penny per share. So 4 quarters times 4 is 4 pennies over the whole year for that share. So now Nvidia hasn't been moving anywhere since August, really. Nvidia has been going sideways. So technically, if you bought T-bills, you made more money. T-bills, if you converted that to T-bills, you get 4 to 5%, like I said. So that's why when you look at it, let's go look back here. A lot of people are just building cash right now because they no longer, like if you look at the top, right, of 2023, that was the highest, the last highest percentage of cash that people were holding. So it was like 38 to 40% of the what people own in capital was in cash. And then since we had the bull market, after that dip, we've gone all the way down to the lowest point we ever had, even before the great financial crisis. So everybody's been going to AI. So they're like, forget cash, forget the T-bills. I don't care if they give me 4 to 5%. I'm going to go buy Nvidia and all the stocks that have anything to do with AI, right? And so we've been going down to probably just below 30%. And now they've been putting the foot off the gas pedal right here. Investors avoiding risk from the Iran war, selling stocks and bonds, and rebuilding cash allocations. They've also been selling gold and silver, all right? In an echo of strategies followed after Russia invaded the Ukraine in 2022, holdings of cash at fund managers has jumped by the most in 6 years. Bank of America Corporation's latest survey of these investors showed this month. Meanwhile, strategists at JP Morgan and Chase Company said this week that shifts in positioning in response to the conflict may have much further to run. Okay. Still, low cash allocations by historical standards present a headwind to both equities and bonds going forward, for as long as geopolitical and macro uncertainty remain elevated. JP Morgan team led by Nikolaos Panigurtizoglu. So this guy is some Greek dude with a Turkish surname. All right, whatever. Wrote in a note. The concern among investors is that the energy price shock caused by the war will fuel inflation, pressuring central banks to raise interest rates. Ding, 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 ding. Global stocks have dropped 5% in March, while the price of Brent crude oil is on pace for its biggest monthly increase since 1990, trading well above $100 a barrel. Falling bonds have pushed U.S. yields to the highest in months. Markets that had been expecting the Federal Reserve to cut rates in 2026 now price a 50% chance of a hike by the U.S. Central Bank by October. In Europe, hopes for lowering borrowing costs have been replaced by bets on 3/4 point increases by the European Central Bank this year. Investors have been abandoning equities, bonds, and gold all at the same time, preferring instead to raise their cash allocations. Even so, cash within portfolios is at a modest level compared to when the Ukraine conflict began. Gold has fallen more than 15% since the war began, as the prospect of central banks keeping rates steady or hiking them reduces the appeal of non-yielding bullion. Yeah, because gold doesn't pay any yield right there. The Bank of America survey conducted March 6 to 12 showed that cash levels surged 4.3% of portfolios from 3.4% in February. That compares with 5.9% following the invasion of Ukraine and during the COVID pandemic. All right. Very good. Okay. That's it. That's all I want to talk about right now. Okay. So anything else we need to discuss here? We have 2 more articles to read, and I think we're done. Have anything else I wanted to cover kind of during this? Okay, let me see. All right, let me do this as an interlude, okay?
Looks like I kind of fucked up. You've seen the polls and so have I. I got elected on no new wars, and now we'll be lucky if moonstones start to fly. I tried to cover up the Epstein files. Seems as though I'm a file. Always gonna keep you up, always gonna let you down, always gonna stab your back and betray you. Always gonna make you sigh, always gonna make you cry, always gonna tell you lies and betray you. I've been president for so long, then all this 6 years now, the swarm's still in training. Inside we both know what's been going wrong. Israel's got tapes of me diddling children, and if you want it, deportations. I've been less than Obama did. Always gonna keep you in, always gonna let you down. So can you turn around, I'll backstab you. Always gonna make you sigh, always gonna make you cry, always gonna tell you lies and betray you. Always gonna keep you up, always gonna let you down. So can you turn around, I'll backstab you. Always gonna make you sigh, always gonna make you cry, always gonna tell you lies and betray you. Bring it every bit of string running. Ooh, and all the kids, children. Always gonna give you up, always gonna let you down. Second you turn around, I'll backstab you. Always gonna make you sigh, always gonna make you cry, always gonna tell you lies. Always gonna give you up, always gonna let you down. I'll backstab you. Always gonna make you cry, always gonna tell you
All righty, good. Okay, let me show you this, guys, for Micron. Okay, if semiconductors is going to go down, this is kind of like what it's telling you here. It looks pretty pitch perfect, right? This looks pretty perfect. So that's it, guys. Is this real? Is this for real? Then, you know, we are in trouble here. This really looks like it's keep going down then after a while. So that's why I say, like, look for a good spot to short semiconductors, short Micron. If this follows through, this thing follows through, oh my God, all the AI guys will just be screaming and yelling to get the hell out. We are in a big problem right now. Big problem. Okay? So, yeah, I don't know what to tell you. All right. Okay. Okay, that's it for that. Let me read these next articles, and then we'll wrap it up. Just 1 hour here. I think you guys know what to do. You know what? I'll be working on All right, this is where we're at. Okay, guys, let's read this, and we'll close out the show. Over 11,000 munitions in 16 days of the Iran war. So this is from Russia. I think this is the think tank in England. So the British think tank right here. I think that it's one of the oldest think tanks in the world. So they basically said that Israel is running out of significant numbers of advanced munitions have been expended, revealing that battlefield dominance matters less than the industrial capacity to replenish critical stockpiles. If the war in Ukraine was a wake-up call for the Western defense industrial base, the first 16 days of the Iran conflict are a fire alarm signaling a crisis of endurance. The intense consumption of advanced munitions during Operation Epic Fury has revealed a critical vulnerability, a strategically ruinous cost-to-exchange ratio that the West's industrial capacity is not prepared to sustain. While American and Israeli forces achieve tactical success by striking thousands of targets, the wider coalition is also downing drones and intercepting missiles by expending multi-million-dollar missiles that cost a fraction of the price. These tactics and Ukrainian military advisors deployed to the region because they have observed coalition air defenses firing thoughtlessly. The asymmetry is rapidly depleting high-end stockpiles. As shown in Table 1, our Payne Institution proprietary ledger tool tracked Iran war munition expenditures, which showed coalition forces expending 11,294 munitions in the first 16 days of the conflict at a cost of approximately $26 billion. After an initial salvo of over 5,000 munitions in the first 96 hours, the conflict has settled into a grinding trial of attrition. While Iran's daily missile and drone attacks have fallen by 80 and 90% from their initial peak, the sustained pace continues to drain the coalition's most critical assets. Accordingly, our analysis has tracked that since Day 5 and after, Iranian missile and drone attacks have averaged 33 and 90 strikes per day, respectively. So here, you can take a screenshot of this. So I'm going to slowly scroll through so you can actually take down how much your taxpayer dollars are paying. So do you want to pay taxes this coming April? Have you paid your taxes already? It's going all into this shit right here. There you go. Okay? So the true strategic risk, however, is not the total expenditure, but the uneven rate of depletion. Inventories of some munitions remain deep and scalable, while others, particularly long-range interceptors and precision strike weapons, are nearing exhaustion. This dynamic marks the convergence of several established strategic logics. Bertrand Batty, Impotence of Power, captured the paradox of modern warfare, where American hyperpower of battlefield dominance fails to secure political outcomes. Barry Posen's Command of Commons grounded U.S. military primacy in its ability to project power across global sea, air, and space. Yet, as Martin von Creveld revealed back in 1991, that advanced militaries become uniquely fragile when their power depends on complex, low-density systems that are difficult to replace under stress. Alrighty, there you go. There you go, guys. So we basically are running out of munitions going into next week. So I believe next week, Israel will run out of everything they have. Okay, because it takes a long time to make new advanced weaponry for Israel. So I think this is why Trump will keep pressing for a taco. Okay, this is the reason why we're going to have a taco moment coming next week at some point. So let's say we're going to extend the deadline, right? And we're going to run out of that. Let's see here. Depletion of right here, 81.33% of munitions depleted in Israel for this arrow 2 and arrow 3. Okay, what's left do we have? So offensive, defensive, the less defensive. David Sling Stunner. So I have no idea what that is. Okay, whatever, but you can read this article yourself. But the arrow interceptors are at 81.33%. Okay, so that's what's going on here. We have 81%. All right, so yeah, you can go read this yourself. Projected depletion, March 27th. Arrow 2, arrow 3. So that's tomorrow. Let's see, what's the other defensive? I guess that's all of the defensive things here. So most of the rest of it is offensive weapons. Let's see, Allied, THAAD. So this is probably all the Gulf states. Will deplete around April 3rd. April 3rd will be the next depletion for the Allied group here. So that's probably the Gulf states. Israel will deplete the THAAD in April 11th. So mark those dates down, guys. That's it. So now you know when they're going to deplete everything. So sometime during early April, we'll deplete most of all these things into mid-April. And then after that, we're going into May and June. I guess the U.S. will deplete all the rest of the other stuff going into August. So yeah, you just keep screenshotting this. Very nice article right here. So it tells you all the dates where they're going to deplete everything. So we know exactly when Trump might taco next, right? So most of this stuff, this is why there's an issue to go into tomorrow, because they're going to deplete all their arrow defensive capabilities. So there you go, right there. Okay, so you can read this long-ass article, blah, 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 yourself. The description has the link, okay? So if you're on Kick, go to YouTube. Everything I'm showing here is already linked. Okay, this is the last article I'm going to read. I'm going to close it out. We got 1 hour, right? How bull and bear markets differ in day and night trading patterns. The relation of the overnight movement in intraday price movement is something I have studied extensively over the years. I have designed and traded strategies that specifically look to take advantage of overnight edges. But to build a strategy around any market edge, you must first understand that market's tendencies. Personally, I have found great value in studying historical tendencies. For this exercise, I will discuss day and night behavior in the context of bull and bear market environments. Since this is simply a study, not a tradable strategy, we can define bull and bear market environments any way we want. I decided rather than look at long-term moving averages or other common techniques, I would simply be precise about when and where major rallies and sell-offs occurred. So I defined a major sell-off as any S&P 500 decline that reached 20% or greater. That bear environment would last until the SPY began to move its next move to new highs. Let's look back to the 1993 inception of the SPY. So that's when the ETF was created. That left me with 4 distinct bear market environments. They were July of 1998 to October of 1998, March of the 2000s, into August of 2002 and August of 2007 up into March of 2009, April of 2011 to October of 2011. The rest of the time between 1993 and May of 2015 is considered a bull environment. Since May of 2021 to May of 2015, when the SPY topped out, it has not been determined whether the market is in bull or bear mode. By this test definition, it will only be known when the SPY either makes a new high or closes down at least 20%. The chart shows positive and negative price changes, not absolute price, for the SPY in 4 ways. Overnight changes during bull runs, intraday changes during bull runs, overnight changes during bear runs, and intraday changes during bear runs, okay? So you could say like intraday is like the cash market and overnight is the futures market. So most of the time when you have a bull market, the gains are during the overnight. So that's why you have the nice gap ups. You don't have to really do anything. And then when you have a bear market, most of the losses are during the day, okay? Yes, that's what it is. So that's what you showed in this chart that I've shown several times. Perhaps the most important observation is that most gains during bull markets have come in overnight session rather than during the day. In fact, it was not until the big bottom of 2009 that bull markets got much of any contribution during the day. This is likely because most of the news that caused market movements happened outside market hours, just like we're seeing now, right? This includes earnings, most scheduled government announcements, and possible geopolitical events, which occur on their own timeline. Good news during bull runs will often cause gap higher, and then that overnight movement is absorbed during the day as institutions adjust their positions. I want to point out that price changes shown above do not factor in dividends. Dividends would have added another $45.74 to the bull market overnight price changes. It is also notable that bear markets happen primarily during the day rather than at night. During bear markets, institutions need to liquidate large amounts of stock, often because investors are pulling money out of the stock market to place in safer havens. Liquidations cannot happen at night when the market is closed. If you want to sell large amounts of stock, it has to be during the day. And mass selling will cause prices to go down further. That's why you get those nice dips during COVID and all that, right? So you get this huge flush out. So that's the time you start buying because everybody else is panicking. So you got to be positioned correctly. Okay? So the vast majority of negative price movement in bear markets happen during the day. It is only after understanding market mechanics like this that traders can create strategies to take advantage of them. Some obvious ways to take advantage of this information would be to utilize long overnight positions during bull markets and look to earn profits by shorting during the day in bear markets. Of course, one caveat is that it will be helpful to know whether you are in a bull or bear market, but that is a discussion for another day. Hopefully, we have kind of discussed when we are in a bear market. And so far, we're not in a bear market yet, but we could be. And technically, a little short correction is only like a 1 or 2 week bear market, right? In a long term bull market. So be on the lookout for that next dip. So I think once we get that little taco pump into April Fools, into Easter, then we'll dump after. So next week we'll have Easter, I believe, right? Is that true? Let's see. Good Friday. So when is Good Friday? Oh yeah. So Good Friday, the market will be closed. People observe Good Friday in the stock market for some reason. I have no clue why, but that's just how it is. The tribe will close the markets. You can't trade on next Friday. And then we will be prepared for the resurrection. And then once we'll have the resurrection, then we'll find the next drum of the market. So trade accordingly. GDXU, if you think there's a taco, GDXD, if you don't think there's a taco. Back and forth from now on into tax season. So I'm not going to be worried about doing anything. I told you, get your 10%, get out. Get your next 10%, get out. Get your next 10%. I'm not doing anything else. All right? I'm not interested in anything else. Long-term stuff, we will come to it when I start my Substack. Remember, I'm working on it going into next week. We're going to build where we want to buy the dip. Because if the market does really have a puke after Easter, there'll be a lot of stocks to buy on the list. Okay, so if you're waiting for a boomer portfolio, that's where it'll be. All right, guys. That's all I got to say. See ya next time.